already a clown this clock here, so why don't we go and get started. Welcome to all of you. My name is Jack Lee, for those of you who don't know me or haven't met me yet. Gary asked me to prepare this stock basics class because he believed that maybe a portion of you will benefit somewhat from the stock basics class before he will come on around 8:30 our time here. So what I'm planning to do is I have prepared some handouts, so you already should have it. It's on your chair. I'm planning to make this an interactive session, meaning that I'm not the one who's going to be doing all the talking, because all of you have many different levels of experience, in terms of investment, in terms of stock trading and all that. I overheard a conversation earlier that some of you are shorting stock already, so that's good. I mean that you can teach us all about shorting stocks, and for those of you who don't know, shorting stock meaning that you are selling something you don't have. Literally, you're borrowing stocks from your brokerage to sell it, and the goal is for the stock to go down so you can buy it back at a lower price, so you can capture the profit. Okay, but that's somewhat an advanced topic. So, but for this class, I would like to make this interactive, meaning that if you have some questions, please shout it out so that I can answer those, or maybe some of the students in the class can answer that. So we're in this together, we're learning this together. So I don't claim to be an expert. Gary asked me to do it. He said, "Jack, you can do it." So okay, So I'm standing up here and just kind of be the leader of this session here. So for about 30 minutes or so, I'll probably be going into the handouts, the handout that you have on your chair. Then afterward, if you want to some questions about maybe getting on some websites that you may not know about, then I have my laptop set up here, and we can go into some websites. Then we'll take a 10-minute break before Dr. Gary come on around 8:30. Then he's going to finish the session with 30 minutes of advanced topics. Okay, is that a good plan? Okay, so how many of you have been checking the stock price already? Most of you, some of you have not. So some of you have not checked the stock price. Is that because you haven't been able to get on the internet, or you just don't know how, or
they don't know the
combination?
website?
What?
They don't know the website.
Oh, they don't know the website. Okay, good. That's why you got a handout. Okay. Assuming all of you can get on to the internet, right? There's a very popular website that I use all the time. I use other websites too. It's called the finance.yahoo.com. It's on your handout, top of your handout there. Okay. So when you type that onto it, you will see the page of the finance.yahoo.com website, and then on all my call-out box, what they call the text call box, a number. So when I say look at text box number 1, that means you look up 1 on the text box, then you know what I'm referring to. Okay. So.
No, I don't know what you're talking about.
Oh, okay. See that rectangular text box called one stock ticker symbol put here?
Oh yes, I can see it.
Okay, all right. Remember, like a month ago, I was in the first class. Then afterward, my wife Ann and I, we took off for a 3-week trip to South America. So we visited Brazil and Argentina. So when I have time, I can tell you a little bit about that. We enjoyed our time there. The nice thing about that is, because I just got this smartphone. You know how not up-to-date technology is for me. But I got this smartphone right before the trip, and I'm able to check my position while in Brazil and Argentina. It was great. I said, okay. Then I can take action on those positions that I'm in. Then I know if I need to get out, or I need to put a stop loss, change the stop loss and what have you. So there are definitely some good use if you have a smartphone that can connect to the internet and be able to check your position while you're away from the state. Okay? So coming back to the handout here. So if you are looking up a stock price, you have to know the ticker symbol. Okay, ticker symbol is, if you don't know it, you can type the name of the company and it will give you the ticker symbol. Ticker symbol normally are either a single letter or a 3 or 4 letters. Okay, and the example I'm using here is called the Morgan Stanley MS. Okay, you see that? So if I put in the MS ticker symbol, then I can look up the basic stock information. But one of the key things that, what we are teaching here, what Dr. Gary is teaching here is like, how do we predict the stock price of like tomorrow's stock price compared to today, right? We want to make that prediction. So, and the feedback that I got was that not everyone know how to look up the stock price, and not everyone know how to tell whether the stock is moving higher or lower from the previous day. So if you look at my box number 2, okay, today's stock price compared to previous day, you all see that?
Yes.
I prepared this last night, so I prepared around 7 o'clock or so. So you know what time the stock market closed, right? 4:30, right? 4:30. It officially says 4 p.m. Eastern, but really you can put in orders before 4, and then it takes about half an hour to finish the orders. That's why when Dr. Gary do the predictions, if he said 4 p.m. Eastern, that may be off by 30 minutes because the stock market is still finishing some trade. Yes, sir.
Actually, on Yahoo Finance, which is
Right.
a very good site,
Uh-huh.
they reset at 3 o'clock our time.
Oh,
So
they
if
did.
it's like
Okay.
plus $1 for the day,
Right.
then at 3 p.m. it goes to after hours. It's to tell you how high it is
Oh, okay.
on after hours. So it might be
Right.
just say 3 cents when it actually
Right.
is $1.
Yeah, because if you look at the circle for the text box 2, you look at like 32.61. That was the closing price last night, yesterday
Why
at
doesn't
4
it say
p.m.
closing then?
Well, it's at 4 p.m. EDT. But if you look at the smaller print right underneath it, after hours, did you see that?
Oh, yeah.
I know the print is very fine, but if you look at after hours, it will actually say 32.50, meaning that there are some exchange still trading this stock after hours. But I believe that's a smaller exchange, correct?
Yeah, and it usually resets back to what it ended at the
Right.
day before the next
Right,
one.
right. So there are people who are still trading after hours. Okay.
But
Sherry,
when
got a
we're doing
question?
our predictions though, it's the first one that we're
It's
looking at.
the first one we're looking at,
It's-
exactly.
We're not looking at after hours,
No,
even
no,
though we're
no.
doing 4:30.
Right, right.
Okay.
Right, okay. So when you look at 32.61 is the closing price of yesterday, and it has like $1.40, like there's a down arrow, little down arrow, and then 1.21%. You know what that means? That means this stock price was lower from yesterday's close price. Meaning that, well, when I looked this up last night, Wednesday, compare Wednesday's closing price compared to Tuesday's closing price is 40 cents less. Meaning that it's lower by 40 cents, so it's lower by 1.21%. Is that simple to understand?
Yes.
Okay.
Could you repeat that again? I'm sorry.
Okay, so if you look at the 32.61, you look at 32.61, right?
Yes.
If you look at, the 40 cents, the down arrow 40 cents red,
Yes.
meaning that the stock price is 40 cents lower from the previous day,
Yeah. Okay. Got
okay? And then the parenthesis 1.21%,
it. Yes.
that's like 1.21% less compared to the previous day.
Oh, great. Thanks.
Okay, so that's what I'm saying. So when Dr. Eric asks like, okay, let's scan the stock that you're asked to scan, whether it is lower or higher, then you can look up from the finance.yahoo.com, after like 3 p.m. or 3:30 p.m. Texas time, then you can tell whether your prediction is high or lower, whether your prediction accurate or not. Okay, so that's what you look at. Okay, so that's how you look at the stock price. Basic stuff. Okay, but I believe it's important to know that maybe we're making too many assumptions that everyone know how to look it up. No, not necessary. So okay.
So it
We are
doesn't
clear on that.
really tell you what the yesterday's price is on this page.
Compared to yesterday, because I prepared this yesterday. So when you, let's say
No.
this is today's page,
Yeah,
and it's comparing to yesterday's price.
yesterday's page.
Yes, yes.
Okay, but if I didn't get yesterday's page, there's not any place I can find out where that
You can, if you look up, if you look at the left-hand column, there is a historical prices, okay? If you click that, it will give you all the prices. I don't know how many months or years. You can look that up.
Okay.
You can, but if you just want to compare yesterday from today's, you can minus the 40 cents. You know yesterday's closing price is $32.21.
Okay.
Okay? That makes sense?
Actually, it's down.
The other
To
way,
add-
add 40 cents to 32.60.
Oh, yeah, you're right. Yeah, you're right. Yeah, $33.01. Yeah, right. It's down. Yes, thank you.
When you said if you didn't know the ticker,
You can look it up.
you can look it up.
Yes.
Can you look it up on this website, like in
Yeah,
that
yeah,
little box?
you can,
put
you
it
can
in
just
that
type the
little box?
company
Morgan
name,
Stanley, you type Morgan Stanley.
Morgan Stanley. Just type Morgan Stanley. It will give you the ticker symbol.
Okay.
Actually, when you're typing it, it will pop up already.
Yes.
Yeah, then you can select.
One
So it's very neat. It's very neat. Yeah. And I could show you in a minute after we gone through this. Okay. Okay. We okay? Okay. So number 3, if you go down to the middle of the page, text box 3. I select this chart to look at a 1-year chart. So I circle 1 year. So what I'm looking at, this is the 1-year timeline of the stock chart. 1 year. Okay? And you can select to year to date, 6 months, 3 months, 5 days, 2 days, or 1 day, meaning the current day. Okay? You can select any time frame. But the reason why I select 1 year, because when I look at the stock, I would like to look at the trend line of the stock for 1 year. So I can draw the trend line. Why is this so important? I'll tell you that in a minute. But I just want to let you know that you can select 1 year timeline, 2 year timeline, 5 year, or maximum. Meaning that whatever, for some companies been around for 20, 30 years, you may go back many years. But that's for historical sake. But for what we're doing here, I believe 1 year timeline is long enough. Okay? So I just want to say that you can select different time period you're looking at. Okay, we're okay with that? Okay? So now let's go into the number 4. Number 4 is the resistance line and support line. So we're getting into a little bit advanced stuff, but not that advanced. So what is support and resistance mean? Really, it's a form of trend line. Now remember, it takes 2 points to make a line, right? You have the 2 points to make a line. And how many points it takes to make a trend? 3 points, right? Pretty simple, right? 3 points. So when you look at the price of this stock moving across in a 1 year timeline, if you just eyeball it, you visualize it and say, okay, if I'm connecting some of those lower points, I draw myself a support line. What is support mean? Support meaning that that's your floor. I mean, just like this building, right? It has to have a floor. So what happens when the floor is broken? You go down. You fell down to the garage or the bottom floor or whatever. Okay. Something bad's going to happen if the floor is broken. So for those folks in the technical analysis, they tend to draw the support line. That's your floor. That's your support. Okay. What's the resistance? Resistance is your ceiling. Meaning that anything bounce up to the ceiling is probably going to come back unless some greater force is going to push it over, breaks the ceiling. okay, breaks the resistance. So a lot of things could happen. You know, maybe the company have new product, new management, new something like Apple, okay, iPhone 6, iPhone 7, whatever. They're coming up with the smartwatch now. You guys heard that? Some of you heard that, right? Some of you have been reading Fortune magazine or whatever magazine. They have smartwatch. It's gonna be another game changer. I don't know if they will or not. But supposedly you'll wear it all day long. I don't know if you like it. You'll keep track of everything, you know, your vital signs, your, you know, kind of like wearing your iPhone. It's kind of weird. Without I get used to it, you know. But you know, maybe when they come up with this smartphone, then it's gonna push the stock price higher. I don't know. So things could happen when it breaks the resistance. When it breaks the resistance, meaning that the trend of the stock is going to change. Okay, but for the most part, if you draw the trend line, the support and resistance line, then you can kind of see the behavior of this stock. Why is that so important? Why is it so important to know the support and resistance line of the stock? Somebody?
So you know when to buy and sell.
Yes. Yes, exactly. So
Which thing are you saying yes to?
they both. You want
We
to.
only heard one.
Oh, okay. You want to buy when the stock is coming back up from the support line. And then before it hits the resistance, you probably should put a very close stop loss order or some kind of stop orders in case it go against you in the trend. So at least you can capture your profit. That's why, you know, stop order is so important. Yes.
Why didn't it ignored that peak at the end there?
Oh, because
Why didn't it choose?
Because I was looking at the previous resistance. The trend lines are parallel. Support and resistance lines are parallel to each other.
Oh, okay.
So I just draw all the high points which I believe is touching it. I think drawing the trend line is more like an art than a science, really.
Well, I was going to say because you
Yes.
could have set it up
You
steeper.
could.
You
could. But when I see those resistance lines hitting so many times, it is keep resisting and come back, keep hitting resistance and keep hitting resistance and come back. Then I said, okay. Just by looking at all the previous high points, I believe this is a typical resistance line.
Well, and it's parallel to the support line.
Right.
And that's a hard and fast rule. The
Yeah.
support and
Right.
resistance
Yes.
are
Yes. Yeah. This is
parallel.
also called an uptrend stock, meaning that you can have support and resistance lines horizontal, not just like vertical. I mean, incline. You could have it horizontal, or you can have it like downtrending too. But the advice is, you don't want to trade the downtrending stock. You want to trade the uptrending stock, or you can trade the horizontal, what they call the rolling stock, or whatever name people use. Meaning that rolling stock, meaning that the stock will move up and down along this channel. It's behaving along this channel. And how long will this stock behave and reacting to this channel? No one knows. A lot of things could happen. Maybe there's some big boys, they are buying up the stock or selling the stock and causing the stock go down or causing the stock go up. Okay. And on my second page, I'm going to show you how the price volume action is going to cause, then how it behaves, then what we want to do in case when the stock price moving up but at a low volume or high volume. I'll show you in a minute. Okay. So are we okay with the yes?
A while ago you said you should put in a stop what?
Stop loss order, stop limit order.
Okay, can you tell me what that is?
Yes. When you buy a stock, okay, let's say you buy a stock, you know, if you look at the support line, you want to buy it when it's trending up, right? When it's bounced off the support line. But you're not sure you're going to be right. Hopefully you're right, but what if you're wrong? What if you're wrong? What if you take a vacation and you put in position, take a vacation, and then you're in the airplane for like 20 hours, and what if the stock go against you? So the rule is, you know, different people set different rules, okay? When you take a position of a stock, you should put a like 7 or 8% stop loss, meaning that if the stock drop below 7 or 8% of your purchase price, you'll get out, you'll just sell. Because if you sell at an 8% or 7% loss, you still have what, 93% of your money. What if you don't put a stop order? What if the stock goes against you and keep going down? Could it happen?
Oh, yeah.
Oh, yes. Oh, yeah. Very definite. Oh, yes. I lost money, you know, because I didn't put a stop loss order. Okay, many times already. So I learned that lesson. So you don't need to learn the lesson. You know, the key of like taking seminars and learning is that learn from other people's mistakes, so you don't have to learn it with your own money.
So when you put in one of those stop orders, basically they sell your stock off if it hits a certain point, is that what has going on?
Yes.
Okay.
There's two ways you can do it. Either you can put a stop limit or just a stop order. Okay. A stop limit meaning that when it hits below that price point, I will only sell at that price. Okay. A stop order meaning that when it hits your price, sell no matter what happens. Now there's a risk of doing that, but it's up to you. Okay. Meaning that if the stock is like falling so fast, even though you want to sell at 8% loss, but by the time it executes your order,
Right.
you may be losing more than 8% or 7%. Okay. But at least it's better than losing more than that. Okay.
The stop limit, how is that different than the stop loss? The stop loss.
Oh, a stop loss is just a term given
So
to
it's the
this
same
type of
thing?
order. A stop loss order is like, it's just a general name given to all the stop order. And there are different types of stop order. You know, if you look at, you know, the name stop loss, okay, just a general name. But underneath it, you can have stop or stop limit or trailing stop and different types of stop orders. So look at
They kind of mean the same thing, you're saying
different types of,
at what point you want the
yes,
stock to be sold.
yeah, exactly.
To
Stop
limit
loss
your
meaning
loss.
that you want to stop the bleeding, so to speak.
Sure,
You want to stop the bleeding.
yes.
Okay, just stop the bleeding. Why is this so important? Because it's important because you can limit your loss, really. That's the primary reason. Because in the stock market, we're dealing with two different emotions, right? If you heard that, like greed or fear. And if you buy a stock at a very low price, when the stock is keep moving up, you say, oh, I make so much money. But when the stock is moving down, you say, oh, the stock's been up here before. I just wait for the stock to return to that level, then I sell. But what if the stock never return to that level? What if it keep going down, and you will be looking at the stock losing more and more of its value.
Well, the other thing is making the decision when you go in. You have a plan for this stock.
Mhm.
This plan is to make money and for it to go up. But
Right.
if it doesn't, you want to control your loss. And
Exactly,
that's what it is.
exactly.
So you have to make that decision, not when it's falling, say, oh my gosh, now what am I gonna
Yep.
do? You wanna make it when you go in.
You
have
got
a
it.
plan
You got it.
before you
You
do
got
it.
to know your exit before you
Know
enter.
your exit before you enter.
When you get into a building, you have to know all the exits. In case there's a fire, you know where to get out. So simple, right? So easy to make money, right?
Live to play another day.
Right, but I'll bet you when you use your own money,
You're right.
then it becomes a different issue. So the key is what?
Discipline.
Follow your rules.
Rules.
I lose money when I don't follow my rules. Set your rules and you follow it. And don't make your decision while you're in the trade. Meaning that once you take your position, don't try to make those decisions. You should already make all your decisions already. You should plan it when it start move up, so much, I'm going to sell so many percentage of it. When it start move down, I'm going to sell whatever rules that you set up. You feel comfortable with. Your rules should match your personality. Some people are more risk takers and others are more conservative, depending on your style. But the key is to have rules, When you don't have rules, then you get killed in the market, right? They say the bulls make money, the bears make money, the pigs get slaughtered. Okay? So we're okay with the trend line, the resistance and support line. Okay? So if you look at the bottom of the page, on box number 6, today's volume. Okay, today's volume is what? 21 million shares. So this stock is very heavily traded, 21 million shares. And the box below that is average volume, 9.5 million shares. So that is the 3 months trading volumes, the average. Okay, why is it so important to know the average volume versus today's volume? Why is that?
It's speculation.
Speculation? Okay. You mean like more people speculating the stock will go down because the stock price goes?
Speculation of whether or not
Speculation
it's
or?
a short trend or
Yeah,
a full-time or supportive trend.
that too.
Volume's truth, it's a lie detector.
Mm-hmm.
So if something's happening on very low volume, it doesn't
Right,
really mean
right,
much.
right. Since we're talking about the volume, let's turn to page 2. Let's turn to page 2. Kind of at the bottom, called the price volume action. You all see that?
Yeah.
Price volume action. If you remember these 4 rules, then you know a lot about price volume movement, and you can make a lot of money. Because in the class we attended, the new venture in Wall Street, the instructor was saying that some lady in the Northeast just follow that rules and make a lot of money. Just housewife, follow that rule. Okay, what does that mean? Price moves up on higher volume, professionals are buying. Why is that important? Professionals are what? Professional fund manager, pension fund managers, or people who got a lot of money. Okay. Do you think they know more than we do?
Yes.
Have you heard of insider information?
Yes.
Somehow they know more about retail like us. Okay? When they are buying more, when they're selling more, they know something more than we do. So the key is what? Don't go against the big boys. Don't go against the big boys. Okay? When the price moves up on lower volumes, amateurs are buying. Meaning that people don't know. They heard this on CNN News or Fox News, or they saw this in Money Magazine. So this is a good stock to buy, and then they go and buy. Okay, drive up the price, but the volumes are not there. Okay. On this case here, the Morgan Stanley, okay. Remember the stock price closed lower, right? And it's trading on how much volume? 21 million shares. Compared to the average volume is what? 9. Was that a lot? Yes, twice as much, more than twice. So if you look up this rule here, price moves down on higher volume. Then what's the next part? Professionals are selling. So when the professionals are selling, do you want to go against the big boys?
No.
No, don't go against the 800-pound gorilla in the room. You will lose. Unless you are a 1,600-pound gorilla. But, I don't believe you guys weigh that much here, right? So don't go against the big boys. Don't go against the professionals. You will lose money when you go against the professionals. So that's why it's so important to know the volumes. Okay? Yes?
So are you saying that if you sit and quote kind of towards the end of the day, if you were actually trading this in money,
Right.
that you're looking at the volumes as they were
Right.
coming up and say we saw this today, it's like, oh, it looks like it's probably a good idea to sell because all the guys are selling.
If you use your stop loss order, it should already execute that for you if the stock drops below whatever sell point you want to get out. Okay? So in that case, I would advise putting a stop order when you purchase a position. Then when it drops that much, then you should consider selling if you have not. Again, it's a personal choice. But when I look at that high volume, but also you have to look at the stock market too as a whole. Okay. But when I see a high volume like that, when the stocks go down, when I look at the stock chart like that, and if you look up, going back to the Morgan Stanley, 1-year chart, if you look at the past several days, I know it's kind of hard to see, but you see those red and green bars, right? The red bars are meaning that the price is lower compared to the previous day. All those red bars. Meaning that consistently the stock has been trading down for the last several days. Meaning what? Meaning the professionals are really selling the stock. They're dumping the stock. For whatever reason. You may not know the reason until days or weeks later. But another point I want to point out, go back to the page 1. Go back to page 1. Look at text box number 8. What's the text box number 8 say? Earnings announcement day. What does it say there?
October 17th.
October 17th is when? Tomorrow. So what does it tell you now?
It's getting out because they're.
The earnings is going to be announced tomorrow. Probably not during the market hour. Probably going to be after market hours on Friday night. They're going to make the announcement. And you wonder why professionals are selling several days before. Do they know something we don't? Right? So one of the rules is like, don't hold your positions over the earnings announcement day. Because you just don't know. There's so much uncertainty. So it's better to be out of the position when you know the earnings announcement day is coming.
If you saw the reverse trend, that on high volume, there's prices going up.
Right.
And the earnings day is coming up and you will hold it.
Again, it's a personal decision because maybe the earnings meet the Wall Street expectation, but they still get a beating after the earnings announcement because they say, oh, you haven't done good enough. So there's a lot of uncertainty over the earnings announcement period. There's so much uncertainty. So if you already have a profit already, you may want to take some profit off the table.
And when you say that, you mean you would sell enough stock that you get your money back of what you have paid to get that stock?
Or take a profit of a significant percentage. So in case if it moves, let's say higher, you still have some position left. If it's moved lower, and say, oh good, I took some profit off the table. See, you never lose money by taking profit.
But taking profit is selling some part of
Yes.
that stock, some
Yes.
of that
Yes.
stock volume
Yeah.
in order
Yeah.
to get your money back.
Right. Yeah.
Okay.
Yeah, there are some rules on like how much profit you should take. When the stock price move, let's say 75% off the support line, whatever that is, you sell a percentage. Because you already captured some profit, why not capture the profits now when you can? Instead of wait to get it higher, get some profit off the table. Again, different rules for different people. I'm not saying that this is the rules for you or for someone else. If you feel like, oh, I know this stock, I think I'm gonna stay with the stock. But then I want to caution you, because if you look at the bottom of page 2 on my money and risk management, I put down the bottom, I said, date your stocks, don't marry them. Okay? If you like them, just date them for a week or two and dump them, and you can always pay your stock back. But don't marry them. When you marry them, then what happened?
You're in trouble.
You have a relationship, you like it, you love it. And when the stock's not behaving like he or she should, what happened? You get mad and say, oh gosh, you will behave irrationally. And you don't know whether I should dump her or keep her or what. Or him, yeah, there you go, yeah.
Well, we
So,
had to get
right,
our son.
I know. Yeah, there you go. So date your
What to
stocks,
do?
not marry them, okay? Just date them, just you can trade them, but don't fall in love with your stocks. Don't fall in love with them. Date them, okay? Just date them. Have a short-term relationship, like speed dating, right? 7 weeks maybe, just an hour, But, right? Okay. So we know how important the price volume action is, right? So if you look up these 4 rules, if you ask yourself whether the professionals are buying and selling, if the professionals are buying, it's good, right? Because the smart money, the big boys are buying. So, if it fits your criteria to take a position, good. The big boys are buying. They know more than you do. So you probably won't go wrong when the big monies are buying. Now, they are wrong sometimes, but most of the time they are right. Because they have somewhat insider information that we don't.
But if everybody follows that, doesn't that predict them being right?
The problem is, see the big monies are playing games too, okay? They also looking at the support and resistance line, okay? They know they're going to buy it when it's off the support line. They'll beat the stock price up higher and higher, and then all of a sudden they will sell. They'll sell so fast. They'll make the stock drop, and then all of us get panicked. We want to sell, but we'll sell at a loss. But when it hits the support line again, they'll buy again. They will go through this, channel and make money.
So they're creating the
Well,
trend.
yeah, they're creating.
They're
a trend.
pushing the market.
Yes,
They are.
exactly. That's why
So
they're
that's what-
manipulating
that's
market.
Follow
Everybody
everything.
follows what they do, it's predictable.
But get out
Not
before they
necessary.
sell.
Not necessary.
Figure that out.
Don't be greedy.
Right.
Well, yeah, take it off the table
Because
before it goes too
there are other factors influencing the market as well. There are other factors, like for example, Ebola, okay, or the Middle East, the ISIS, they're taking more position, they're taking more land in Syria, or what have you. They're pushing against the, Baghdad, or the oil price, whatever. All those other factors are driving the stock price, are driving the behavior and personality of the fund manager too. So it's not just looking at the stock price itself. Now, if I want to go back to page 2 now, okay, page 2 now, look at the stock market sentiment, okay. There are different ways to look at the stock market, okay. One way is the fundamental, technicals, and market tone, okay. Fundamental is this a good company? Fundamental is looking at the fundamental, like those earnings per share, those book values, sales, whatever. That's the fundamental related to the company. The technicals are what? The technicals are the charts, looking at the patterns of the charts. Okay, when's a good time to buy? Is this a good buy point right now? Okay, that's why you draw those support and resistance line. Then you find out when's a good time to buy, when's a good time to sell. Then also the market tone is driving the market too. Okay, why buy now? Is our market good overall? Now, when Dr. Gary and I, when we took the New Venture and Wall Street workshop, he was doing a scan while we were in the class, and he said that on the fundamental, 8% of the fundamental influence the price, 3% influence technical, 89%. That's a very high percentage influencing the stock price. So if you know the market, you're gonna be 90% right if you know the market. Okay, the rest of those are really just noise. So know the market. So what I did here is, you can go into this website here. You can, they publish a free report, and I just pulled this report down just to look at the S&P 500 moving averages. How many of you don't know what S&P 500 is? That is just the stock index of the 500 largest companies. Okay, and they have a formula which calculate the average price of that, so they call it S&P 500. Okay, so they plot this curve out, and they put like a 50-day moving average and 200-day moving average, and everyone is following this. So if you look at box 10, you look at box 10, you're all on box 10, support level. Remember what I said earlier about the Morgan Stanley support level, right? When it breaks the support level, meaning something bad's going to happen, because you don't know where the floor is, you don't know where the bottom is. So if the current price, well, yesterday's price was 1877. The 50-day moving average was higher than that, and the 200 days moving average is even higher. So it what? It's below that now. It's below the support, meaning that the bottom is what? It's broken. So bottom is broken. What does it tell you? If you look at box 11, the current sentiment is negative. Current sentiment is negative, meaning that people don't like what it's telling us right now. So a lot of smart money, they are not going into the market right now. If they go into